Welcome back to Lem's Cryptoverse, and today we have a special guest, James Foord of the Digital Trend. So maybe you could tell me a little about Digital Trend and tell us about your background.
Yeah, hi, hello. Thanks for having me, Dominic. So like you said, I'm James Foord. I run the Digital Trend on Seeking Alpha. I've been doing that since 2019 now. And basically focusing on digital assets, started with tech stocks and then, of course, moved quite a bit into cryptocurrency, that kind of stuff. Basically started writing because, well, I studied economics in university. And ever since then, I kind of developed quite a keen interest in, obviously, investment, gold as well. Might call me a bit of a gold bug.
Gold bug.
And that's where then I developed kind of the interest in Bitcoin as well as kind of that sort of digital gold kind of asset. So always was very interested in Bitcoin and the technology behind it. And that's it. Just started doing Seeking Alpha part-time. Now I'm doing it full-time. I've got my marketplace out there and it's going good. Yeah.
And you kind of segued into it already, but I was asking about your background. It seems like you and I had the same crypto journey. I started in TradeFi. Basically, I worked for some of the largest banks in the world, like the largest Japanese bank and the largest European bank in terms of assets. And I was doing traditional industry analysis, credit analysis, and risk reporting. And then I went from that on my own personally. I was looking at tech stocks. And so I made the segue from tech stocks to crypto, because if you think of it, crypto to me is like a software operating system. So that's how I got into the crypto rabbit hole. So how did you get into crypto? Was it a natural evolution?
Yeah, basically, kind of like I said, just really moving on from gold. Studying economics, I just became very, very interested in basically monetary policy and the role that gold has played. Obviously, then everything that the central banks are doing now, just absolutely fascinated with everything to do with money and currency. And Bitcoin then came out and it was like, well, this is a cryptocurrency. What is this? Is it the future of currency? Obviously, a lot of divided opinions on that, but I just took it upon myself to answer the question.
So James, this leads me to the next part of this talk we're having, because I want to talk about global macro. I feel that Bitcoin forces you, if you really want to know the industry, the crypto industry and Bitcoin, Bitcoin forces you to know macro, because macro is tied at the hip with Bitcoin. And so Bitcoin is macro, macro is Bitcoin. So first of all, I assume you feel that way. And if not, let us know. But let us know your framework for the markets. Do you think we're in a new bull market for crypto? Because everything looked like it hit bottom in December and it's been shooting up. And then the stock market's been shooting up. So people are saying that we're in a bull market because technical indicators like the 200-day moving average, we're just breaking through them. And if you look at crypto, like the on-chain metrics, like the pure multiple, I mean, there's about 100 of these metrics. I won't tell you each one of them, but it seems like people are saying, prognosticators, analysts are saying that we're in a new bull market for everything. So what's your framework for capital markets?
After doing this for a few years, I think that it all comes down to what you might call just liquidity is one of the big factors. Obviously, everything that the banks, the central banks do and how they manage that. I mean, nowadays, especially, you can see how a lot of the times assets have very strong correlations. Either everything moves up or everything moves down, kind of, and basically has a lot to do with liquidity. And basically, whether the central bank is turning that tap on or off. Obviously, they started turning that tap off towards the end of towards last year, and that's changed things a lot. Like you said, Bitcoin, excuse me, Bitcoin also it's very related. In fact, I think one of the assets that's most correlated with that liquidity, really, and that's why you've seen the Bitcoin shoot up over the last few years. Of course, with other risk assets as well. I mean, that would be sort of the global framework, I think, that's what's most important. But then, of course, within Bitcoin, then obviously you can look at, like you said, there's all the on-chain metrics, technical analysis, all the ideas behind the 4-year halving cycle, and of course, just the fundamental idea that, you know, if you obviously believe that the current monetary system is a bit messed up, then perhaps you might want to own some Bitcoin.
Speaking of which, I wanted to share you my screen. I want to start today with this, but let's just do it now. I want to start earlier with this right here. This is the Bitcoin. Can you see the screen?
Yep.
This is the heat map. I'm sure our viewers are familiar with it. And if you look, Bitcoin hit 25,000 today as we're speaking. And this is the highest point in 6 months. It's up 18%, and some altcoins up 100%. Aptos is up like maybe 400%. And Solana, which had a near-death experience, is going up like crazy. So this is unbelievable. But I wanted to show you something else. Speaking of that, it was this. You mentioned financial conditions, and I found a really great chart here. It's a little old, but let me just I can't see. I got to get something out of the way. So can you see the whole chart here? It's shown BTC versus financial conditions. And you can see it moves in tandem with financial conditions. So it's pretty unbelievable. So I don't know about you. I disagree that for now, I think Bitcoin is highly correlated with long duration stocks. It's highly correlated with the US dollar, highly correlated with financial conditions. So I do not think, like the narrative was, that Bitcoin is not correlated. And I got fooled by this because I listened to all these so-called smart people that said it's not correlated. And then I found this chart a year ago that showed, maybe it was a little less, it was showing how correlated it is. And it's not just, everyone's saying it's just correlated now during 2022 when the Fed started raising rates, but it's not true. Bitcoin was correlated to liquidity even going back years. So I think we need to keep that in mind. And so I'm just confirming what you're saying. So how do you feel about it now? Like, do you feel like we're, since financial conditions right now, they're loose? Because I don't know if you saw that. I have a chart I could show you later, now or later. But basically, the chart is going to surprise you. It's showing the financial conditions this year in the last month or two have actually gotten better. So even though the Fed's been tightening for 1 year, dramatically and drastically, financial conditions are the same as they were almost a year ago. So my question to you, and this is because of the debt ceiling, the Federal Reserve is releasing, I don't know if you know, but not too many people know about that. You know about, the Fed's releasing money, almost like a secret quantitative easing. So basically, here's my question. Crypto's going up, stocks are going up, meme stocks like, GameStop type stocks, Robinhood type stocks, they're going up like crazy. Crypto's going up like crazy. Speculative altcoins are going up like crazy. And if you look at the fear greed index, whether it's a crypto fear greed index or the stock market fear greed index, everything is shown that we're greed. And if you look at the put to call ratio, everyone's buying call options on Tesla and on Ethereum and Bitcoin. So everyone's buying calls versus puts at the most we've seen in maybe years. So do you feel like we're at a short-term top, or this is a new bull market?
I mean, that's the big question, isn't it? Basically building a little bit on what you've said. Like you say, it's very interesting. I'm actually working on just writing an article today, basically addressing what you're saying, that actually, if you look at financial conditions, they are very loose. Of course, some of that has to do with the Treasury General account and the debt ceiling. Also, the use of the reverse repo facility is a factor. That should taper off, of course, in the US, maybe towards the halfway point of the year. But then you look at global liquidity, and you have a lot of liquidity coming from Japan, possibly China starting to pour a lot of fuel, let's say, on that fire. So that's very significant. And of course, like you say, you have that correlation, or kind of negative correlation, with the US dollar. And I do think that in general, probably this year we could see some weakness in the US dollar. So that, of course, also helps risk assets in that sense. Yes. So It's a very interesting question. Lately I've been cautiously bullish. I mean, from a short-term perspective, I think we're getting a little overheated. So I think right now, kind of, I do a bit of a technical analysis, use Elliott waves as well, that kind of stuff. I'm thinking 4250 might be an important level. I think we could get a bit of a pullback, and depending on how that looks, basically we're either looking at, basically the start of a new bull market. I think is possible. I think ultimately everyone knows there's going to be kind of a recession at some point, and I think higher, but another bottom, like the market's going to go lower. The question is, I think at this point, odds seem to be increasing that before it goes lower, it might actually make a new high, and I've started to tilt that way, and well, we'll see.
And were you giving an estimate for the S&P? What were you saying in terms of the index?
Yeah, the S&P, I think I have like a target, I think at about 4250, 4300. I would begin to maybe taper off. If you're long, I think at that point, maybe try and taper off and then prepare for a bit of a pullback. And then kind of depending on what that pullback looks like, and if we can kind of consolidate a bit, then definitely I think there should be a chance maybe a little bit later in the year to get in, and to get into the market at that point, if indeed we are heading higher, which at this point, there is some strong evidence, like you say. I mean, there's indicators for everything, right? I think you're talking about that sort of moving averages breaking and stuff, but then you can look back at examples, previous bear markets where that kind of happened as well. It's interesting. I mean, especially with Bitcoin, I think it's very interesting that we sort of Bitcoin hit that bottom at around 15,000, almost on the dot to where it bottomed last cycle in terms of obviously it's 4-year halving cycle. So I mean, they say history doesn't repeat itself, but so far it's worked. So
So far it's rhyming. Speaking of Mark Twain, or Samuel Clemens, as they say, there's lies, and then I'm going to say on-chain metrics. And this alludes to something you said. It seems like you can find an indicator to support anything you say. And so it's very difficult to have to figure out what to do and have a methodology. So what I do is I have a systematic framework, because otherwise you get lost, because one day you hear something in the news, someone tells you this, another day someone tells you that. So it's very hard. You need to be very disciplined. So I was going to say, I think we disagree, but not that much. I'm trying to find some areas of disagreement with us. So with your S&P, I thought that was higher than my forecast, but what I did earlier, what I want to say is I did a video when the market was correcting. I think there was a Christmas rally. The market was going up in December. Then it was going down, and then I put out a bullish video. And if I recall, I think I said that S&P could reach around 4,200, 4,250, and that's because it's resistance. Now, where I differ from you is I'm bearish right now, because the problem is, and I've had this in the past, where I say, let me go with the indicators, like let me have stop limits, and let's go with the trends and the Elliott wave. And then it happens like this, like the market goes up until it doesn't. So it goes up and then there's a blow off top. And that's how I feel like we're getting now with speculation, like a blow off top, and it could go down quickly. So rather than saying I'm constructively bullish like you, I'm actually outright bearish. I became bearish around 2 weeks ago, but I said I was early. I put out a video saying I was bearish on crypto and the stock market because of confluence. It's like everyone singing a song, playing a different instrument. And when you get confluence, you get an orchestra, like everyone singing together. And that's what I think we have. So 2 weeks ago, I said I was early, but I would rather put out that sell. And I put out a forecast of 4,250, and I think 25 to 20,000 on Bitcoin. But I am bearish, especially now, because I think that most, not all, most of the indicators, short-term indicators, are pointing to a top, but there is good technicals in terms of trend lines and the golden cross being broken, and the 50-day and the 200-day, and the stock market breaking the 200-day. So there's a lot of that. But I still think because of the speculation, and I could talk about it later. I already talked about it earlier in terms of too much going into like Tesla call options is good. That's just one example. People not just buying call options in Tesla. They're buying way out of the money strike price. The same thing with Ethereum. They're not buying Ethereum at today's spot price strike in the money. They're way out of the money. They're buying lotto tickets. So it's, to me, it feels like February, March of 2021, when you had SPACs doing well and meme stocks doing well. So for me, I'm ready to say I'm just getting out and or even shorting the market. I think now's a better time to buy treasury bonds because the yield curve, other than the last week, the yield curve has been inverting. So I think, and you alluded to this, I think we're going to get the second down phase where we get a compression of the PE ratio, which is around 18, 18.5, down to maybe 12. But then the earnings, the denominator of that PE ratio is going to decline as we hit that recession. So I guess we're in somewhat agreement, but you're more bullish short term, I think, right?
Yeah, I mean, I think that to an extent, what we're seeing now, some of the data we're seeing is just that again, that recession which everyone is expecting, it's not really materializing yet, and it may still take some time. And yeah, I've just begun to wonder lately whether in that time where it materializes, whether the market can actually just say, well, there's no recession yet, so let's just keep the party going. Like I said, you have those factors like global liquidity. I mean, it is true that from a US standpoint, obviously liquidity is going to in the US will be a bit lower throughout the second half of the year. And I do think that maybe moving into the March FOMC meeting, we could develop some kind of narrative of, well, kind of like we're seeing now, oh, well, now the Fed might raise to 6%. Oh, no, be careful, So
yes.
definitely, I'm definitely, like you say, also kind of bearish to an extent, but, also watching for that, okay, I'm bearish, but, I mean, you saw the rally we got just now, and kind of, you don't want to miss that so you have to be, and again, you have to understand, yeah, kind of markets don't always follow the fundamentals. So, just it's important to always keep that view, and keep one foot in if possible. But I don't know, you make a compelling point too. I might have to buy some puts.
You're going with the flow. The trend is your friend, as they say.
Yeah,
I just right now, I guess I'm more because the returns are so high, especially in crypto. I try to put on my risk hat all the time. I'm trying to look, I should look more for risk than I do for return. So I think you answered a question I was going to ask you, kind of a funny one, because you mentioned Elliott Wave. Do you think technical analysis is astrology for men?
uh,
Do you use technical analysis? I use it, but to a smaller rate, I think, than other people. Smaller.
It's funny, yeah. That's what my dad used to tell me, because he was very into astrology and said, "Well, technical analysis is just astrology for men, right?" The way I see it, I think that it has its place. I think for trading, especially, I mean, after all, especially when you're looking at moving averages, Fibonacci levels, and understanding that to an extent, a lot of other people are looking at it. So to that extent, it's useful to know what other people are thinking, right? The market is ultimately made up of other people making decisions. But I always personally, I try to always underpin whatever view I have of the market, of my charts. They have to be underpinned by some macro factor, whether it is, I guess my view on liquidity, recession, or just my overall conviction that, Bitcoin is going to do well in the coming decade. So that's kind of the way I see it. I mean, I understand why people are skeptical of it. I like to use it. I think it can be a good tool, especially for those more trying to trade a bit. That's definitely the way I see it.
Okay, well, you have any questions? Because I want to move on to crypto with the little amount of time we have. Do you have any questions to me about my macro view, or is it pretty clear to the audience and to you?
No, I mean, just kind of understand a little bit your methodology, and kind of when you say we're going to go down, like why are you so imminently bearish? I would say, because like we said, there's indicators for pointing to both things. What are the ones that you're picking up and saying, well, those are the ones I'm following? So what's your kind of view there?
Yeah, this methodology, believe it or not, started many years ago, maybe as early as when I was in school, and I was in university studying engineering and then medical technology, but I was always interested in the stock market. But I thought, you know what, I'm not contributing to society. I felt like it was gambling, so I ended up studying, engineering, at least for 1 year. But so beginning in those days, I started reading books. And so what I did is I started using certain what do they call them? Like indicators, like canary in the coal mine. And I try to be consistent with them. And maybe I add one or two, but I try to be consistent so that I'm not just getting hearsay and anecdotal information. So the first one I started with, and I'm just going to write a note here so I remember, is sentiment. So I have my own proprietary indicator that I designed many years ago, and I actually forward tested it, not backwards. And you got to be careful with these indicators because when you test them backwards, they're perfect, right?
Of
And
course.
then they don't work. You see that with quantitative hedge funds. They show in their pitch book that they're 99% accurate, and then the performance is poor. So this sentiment indicator, I actually tested 25 years forward. So it took a long time. So that's one thing. And basically, I won't give you the details of it, but it kind of like is similar to the fear greed. Are you familiar with the fear greed index?
Yep.
It's similar to that. And then another thing I look at is trend lines. And so I looked at some technical analysis, like traditional, and that's mostly trend lines. Like this Fibonacci, this DMARC. Do you know DMARC indicators?
I'm not familiar, no.
You should take a look at that. That's like the hottest thing now. Tom DMARC has this proprietary DMARC indicators that predict the market, and everyone's using them. And Bollinger Bands, I don't use them. So I use more like trend lines. And I think that's what you alluded to when you said 4,250 on S&P, because there's some resistance around 4,200 from a declining trend line. So I use trend line. And then I also use fundamentals, like you said. So I'm looking at the Fed raising rates as fundamentals and earnings. I think earnings are going to come down once we hit a recession. That was my biggest mistake this year. Last year, I thought the recession was going to happen sooner than it did, but it takes time. So the other one is fundamentals, and other one I look for is confluence. Well, I'm looking outside to other markets. So I look at other indicators, like such as crypto and Bitcoin. So I'll give you one or two examples. I look at the options market, the futures market, like what's going on with it could be stock market too. It doesn't have to be futures on crypto. I look at commitment of traders. Are you familiar with that?
Sorry, commitment of traders.
Yes, to see what speculators and hedge funds are doing. So if all the hedge funds are buying Bitcoin, I take a contrarian point of view. So that's what I do. So I do that. So that's why I said I was bearish on crypto and the stock market, because if you look at the futures market or the options market, everyone is buying call options. So that makes me, from a contrarian point of view, that makes me worry, like, whoa, we're near a big top. And I have some other indicators. I have one called the daily indicator, and it measures like momentum and mostly meme stocks, but other things, measures correlations. For example, it looks at what the high yield market is doing compared to the S&P and to the NASDAQ. I want to make sure both of them are aligned. So today, for example, if the market's down 1% and the high yield market is up 1%, that's a mismatch. So that's what I look at to answer your question.
Right. Well, that's very interesting. A very robust model.
Thank you. So let's go into crypto, because I know that's your area of specialty and that's what I like doing. So there's so much to talk about. I don't know what to talk about first. Maybe we should talk about the elephant in the room. So even though Bitcoin's going up like crazy and cryptos are rallying, the fundamental news is complete opposite, right? Have you heard of Operation Chokehold?
I have not, no.
It's a secretive government operation starting in US, but it's also in Europe. So it's not publicly released. It's supposedly secret. And the US government in Europe, in China, by the way, in Asia, what they want to do is choke crypto. So they've done many things, and this is you've probably seen in the news. They're going after stable coins. They're going after exchanges. They went after Kraken on February 9th, and SEC sued them. They're going after staking, which is the blood. It's the lifeblood of crypto. And there's something else. They're going after a few things. There's one other thing. Where's my notes? Oh, they went after Bislato. I don't know if you ever heard of Bislato. I never heard of Bislato. It sounds like something you get at Starbucks. But supposedly it was like some kind of exchange. And they even going after Binance. And I know you like Binance, but I don't feel like there's enough disclosure there. So what do you think of what's going on with crypto hitting 6-month highs? But the regulatory environment is really bad. So what's your view on the regulatory environment?
Yeah, I mean, everything you say is definitely an issue. I don't know about that Bislata. I think that was a bit of a nothing burger, really. It was a bit of a tiny exchange. No one. Obviously, the big news coming out of Paxos not being able to use BUSD and all that stuff. Obviously, very bad news. I mean, obviously, the regulation isn't necessarily great for crypto. I think there might be a big issue with that. Obviously, crypto's getting classified as securities and people getting fines, exchanges not being able to operate. I think ultimately, though, the way I like to think about it is, well, there's going to be regulation, but there's going to be winners and losers. And I mean, my first point of view is obviously that crypto, or at least Bitcoin in its essence, it can't really be regulated. I mean, you can try and ban it like China did, but what's going to happen? At the end of the day, if you believe in it fundamentally, at the very core, at least Bitcoin, then you can move into maybe the proof of stake. Those are definitely perhaps in a bit more danger. But like you said, when they attack staking, then what you saw is a lot of the decentralized exchanges which allow staking. Obviously, everyone moved into those. And how are you going to regulate decentralized exchanges? And the other thing is that despite all this kind of regulatory news, I think to an extent, you might also think that they're basically getting ready to make it, they're kind of cleaning up crypto so that then the banks can get into it. And I think recently in Europe, they passed a regulation where I think now banks are allowed to hold a certain percentage in crypto. I think recently you saw BlackRock release with Coinbase a crypto fund. So, I mean, I think the regulation is an issue, but I think also it's basically just maybe laying down the groundwork for the institutions to get a piece of the action. Because at the end of the day, people are greedy, and there's money to be made in crypto. Then I'm sure BlackRock and all the big funds want to make it as well. No.
Yeah, what you're saying reminds me is that there's so many conspiracy theories. I don't know what the truth is. I already mentioned one, Operation Chokehold, but then there's another theory that all this is happening because the big guys like BlackRock, JP Morgan, Goldman Sachs, and all these big asset managers, they want to get in too. But that's also conspiracy. So it's hard to know what the truth is. But so what I think, this is the way I think of it. I think regulation right now is a big negative, but I think long term, as regulation gets enacted, especially from Congress, so I don't like what the SEC is doing over here, Gary Gensler. What he's doing is he's shooting randomly. It's almost like his shooting doesn't make sense because there's no level playing field. So what we need from Congress, not from the SEC or the DOJ or the Department of Financial Services, what we need from the US Congress is clear regulations that we talk to with Europe, the European Union, and Asia. So there's a level playing field. And then I think only then, and that could be 3 years from now under a different administration, I think only then crypto is going to take off. And maybe that'll time perfectly with the crypto halving event, which may occur, what is it, March, April 2024, right?
Yeah, I think so. Sometime around there, yeah.
So I think crypto is very negative right now in terms of fundamentals and regulation. But here's one thing. I don't know how you feel about this, but there's different types of regulation. One thing everyone's worried about is everyone's always looking at it to say decentralization And here's the thing, they're worried that the SEC, because Gary Gensler can't stop. He keeps saying that everything's a security, and that he's alluding that Ethereum, and as you probably know, SEC in 2000, when was it? 2018, I think it was. They said that Bitcoin and Ethereum were not securities, but now Gary Gensler alluded that Ethereum is a security. But here's my take on this. What I'm doing now, and I did a video on this on price to book, basically treasuries. I'm looking at how much funding these crypto projects have. I think if a crypto project has over whatever it is, $10 million in funding, all they have to do is the paperwork with the SEC and register with SEC as being a security. So I'm not too worried about, oh my God, this project's not a security. I mean, this project is a security. It's not decentralized enough. I'm worried about centralization for other reasons, but not because of that. Like if you invested in Polkadot or Cardano and even Solana, even though they got kicked below the belt and they had a near-death experience, they still have a lot of money. The point is they have enough money to deal with that. So I'm not too worried about centralization in terms of whether or not it's a security. Then there's issues of centralization in terms of control. Like, is the project like Polygon? I think you worked on Polygon. They only have 100 nodes. The whales have control. Like, do they have too much control? I think they even own the administrative keys to the software. So do the founders have too much control of the Polygon network? So that's different than centralization in terms of a security. So did you want to talk about that or talk about some of your favorite cryptos?
Yeah, just, well, maybe before we get into the favorite cryptos, just to build upon what you said. I mean, full disclaimer here, I love a good conspiracy theory. So
yes,
to that extent, yeah, but I'm more on the side of yeah, I think they're laying the groundwork, and like you say, if indeed what we need is a comprehensive regulation, I think that is going to come. My conspiracy is that, yeah, like you say, Gary Gensler's shooting shots left and right. He's just maybe trying to spread what people call FUD, maybe trying to really spread that FUD around, and suddenly this Bislado, who no one's ever heard about, suddenly makes headlines. I mean, what's that all about?
Yeah.
So definitely an issue there. And then ultimately, yeah, like you say, it's centralization is a problem, and it's always one of the metrics I try to look at when evaluating a coin. And it's obviously an argument that Bitcoin maximalists can make, where it's like, well, Bitcoin really is a kind of, uncorrupted decentralization. There's a balance, I think, it's like anything in life. I think decentralization is great. I think maybe certain degrees of centralization are needed for some things. So you need both things. No, so with Ethereum, we're moving to proof of stake. It could become a lot more centralized.
Yes.
But to that extent, I would say, well, what about like a business who wants to run something on the blockchain? They don't want a completely decentralized thing necessarily. They might like the idea of having it. So I think there's room for both those things in the crypto world.
And speaking of what you alluded with, Vitalik Buterin's favorite phrase, the blockchain trilemma, which one do you think is the most important? I've already mentioned one: decentralization, security, or scalability. Which is the most important to you?
To me, I would say decentralization, definitely. I think, fundamentally, kind of just the way I view life, without obviously trying to get too political, I think centralization in our lives has become a problem. It's not a great thing, and I'm hopeful that the next few decades will bring around about kind of a big degree of decentralization. I think you're already seeing it maybe with the power that the internet gives people, the power that Bitcoin is giving people, that kind of independence from these big systems. You don't need to rely on the big companies to make an income, or you don't need to rely on banks to have money in a way, and there's a lot of good things that can come out of that, the flourishing of basically innovation, new ideas, and fundamentally that is the big one for me personally. How about you?
Did you say you liked Polygon?
Yep, I do like
Okay.
Polygon, yes.
So I want to tie that up with your question. So I thought about this a lot. I actually think decentralization is less important than security and scalability, at least in the beginning. And especially with Polygon, they only have 100 validators, but they're doing partnerships like crazy. I was going to show you a chart if I have time. I only have a minute. But basically, let me see if I can find this chart real fast here. Here are the partnerships. Can you see them? There's huge partnerships that they have. And I think that's because companies feel comfortable working with someone that's like them, like a centralized entity. So for now, I think that we don't need to worry too much about being decentralized, but we do need to be secure and definitely scalable. So we're running out of time. So I think I'm going to invite you back because I have a whole list. I have like a 50-page, you can't see it here, 50-page of notes to talk to you about all kinds of crypto. But before that, but we don't have much time. So before we go, I just want to say thank you for coming. And I hope to see you back in the next week or two. Thanks, James, very much.
Yeah, thanks for having me. It's been a pleasure, and I definitely look forward to speaking to you again.
Thank you. Bye-bye.